So we have an awesome panel today. We're going to be talking about money and investing. Show of hands, how many of you want to retire at some point? All right, there we go. Show of hands, how many, right, like, y'all gonna work forever. How many of you think you want to make $1 million trading on the stock market? Or $1 billion? Come on, there you go. All right, so these guys are gonna help you do both. Very different approaches to investment in stocks. And we're gonna talk about that right now. But first, so I kind of save my money in my mattress. I don't trust financial markets. Ever since the 2008 crash, you know, I just keep everything under my pillow. How would you convince me? What are y'all doing to help people save money and make money? Could you talk a little bit about y'all's businesses for a sec?
Sure. So at Betterment, we advise people about how to save for their most important goals in life. Things like retirement, or if you're not concerned about retirement, you just want to build wealth to give it to the next generation, we'll help you do that. Or if you're saving for a down payment on a home, we'll help you do that. We manage the portfolios for you for each of those goals in a way to optimize, maximize your returns, net of costs, net of taxes, net of your own behavior. We help to inform you to make better decisions about everything that you're doing. And we think this is the future of investing and money management generally, is really advised investing.
Right. Vlad, y'all have a different take on things. So how does Robinhood work?
Robinhood's a mobile app that lets you buy and sell stocks without paying commissions, and there's also no account minimums, so you can start investing or trading with as little as you want. And we consider ourselves more of a tool, like a utility. So I guess the difference is from a product like Betterment is that we require customers to actually make a decision about what they want to invest in or what they want to trade. And it's much more for people that are more active and self-directed and actually want to control and pick what they want to invest in. And we offer a suite of thousands of different securities, ranging from individual stocks and US listed ETFs as well.
And how did y'all both get into the business? What were you doing before that brought you into the world of money management?
So I got into the business right here on this stage at TechCrunch Disrupt. 6 years ago,
Happy anniversary!
Thank you. So it was a great day. It was a lot more nerve-wracking than today to be on the stage.
I'm less scary than
you're all right. Mike Arrington was a force. But before that, I was consulting to banks and brokers and getting to know the investing and financial services industries. And I found again and again that these big institutions were really slow to change. Even if they thought they had their customers' best interest in mind, they weren't practicing it. I would be on a 6-month engagement building a new product for them, and we would never once talk to a customer.
Right.
And I thought, this is crazy. This is not the way modern products are built. You have to listen to your customers.
Right.
You have to align with their best interests. And the banks, there's good people there. They may want to do that, but it's not the way they're structured. They're actually structured to oppose the customers. Everything is a sale. Everything is a transaction.
Right.
So I thought we had to really disrupt that and change it and build a new type of financial institution.
And Vlad, what about you?
Robinhood's my third company in the space. The first two I actually started right here in New York with my same co-founder and college roommate, best friend, Beju Bhatt. The first company was a trading company, and the second was actually an enterprise software company where we sold trading technology to hedge funds and banks. And
high frequency trade technology, right? I mean, this is the flash guys stuff, right?
Well, the actual technology we provided could be used for a wide variety of purposes. It was very efficient and automated, and so it could be used for more latency sensitive strategies, as well as a lot of people were using it for kind of quant strategies as well. But the whole idea was that algorithmic trading was a big force in the industry. It actually changed quite a bit of things in the institutional and professional sectors.
Right.
And a lot of these banks and hedge funds were slow to adapt. Their technology was legacy and old, and they had teams of people that were maintaining it. And we offered a solution to kind of help automate that. So, a team of 2 or 3 traders could now be operating a trading desk that would normally take hundreds. And we saw an opportunity to kind of bring that into retail, where the retail brokerages and a lot of our incumbent competitors looked more like the institutions and banks pre-algorithmic trading revolution. So take that automation and really lower the cost.
So I think this is something really interesting, this idea that you mentioned about wanting to take that technology that the institutions are using that's changing investing and make that accessible to retail investors. And that might be a place where our sort of visions align. We believe that it's harder and harder for retail investors to compete in the markets because of the technology that the big institutions have. If you're a retail investor, the game is rigged against you, right? And you have to kind of build the right tools to give people some sort of arsenal against that market. And I wonder, we're doing that through helping them minimize taxes, reduce their sort of behavioral mistakes, ensure that they diversify and stay on track, and all this behavioral and analytical stuff. How do we improve the retail investors' ability to compete in the markets?
Well, I think that is where the theses sort of overlap. But interestingly, Vlad, I read somewhere that y'all had a sort of come to Jesus moment after Occupy Wall Street. Like you were thinking about the investment markets differently in the wake of that movement. How did that inform sort of the decision to start Robinhood?
Well,
and it seems sort of antithetical that Occupy Wall Street led you to create like a free trading platform for folks to get in on the
Well, I think there were 2 things. One is, we were young at the time and we really wanted to make a big impact on people in our age group, those around us. And, our previous business was selling technology to hedge funds and banks. So taking sort of the top 1% in sophistication and pushing them into maybe the top 0.01%, which was less satisfying. And kind of when we saw an opportunity to build a consumer product, that was just, that was something that we couldn't resist. And at the same time, we could tell that a lot of people had lost trust in the financial system. People thought that it was rigged against them, especially people in our age group. And a lot of the people that participated in that movement were 20-somethings that were college educated, so not the typical sort of group of protesters. And we saw an opportunity to build a new brand in the space. If you look at a company like Robinhood and what we stand for and compare it to like the discount brokerages, which all of them are sort of variations of the same name, right? They have like trade in the name, and there's very little brand loyalty among our generation to those companies. And we kind of saw an opportunity to turn that on its head and really build a company that put the consumer first and reflect in the brand that we actually stand for consumers, and are providing you these tools that were previously accessible only to the wealthy.
Right. Well, indicative of that, Jon, you were telling me a story backstage about you used to work for a Can you repeat that? That was like shocking and horrifying to me what they were doing.
One of the clients that I had back in the day when I was a consultant used to take the opposite side of every trade that their clients would make. So the client would come in and buy X, and rather than go out and place that trades for the client, they would just hold the other side of that position. And so it was in the broker's best interest that the clients lose money on every trade, because they would then be making the equivalent amount of money. And that's how they made a lot of money that way, because retail investors aren't very good at investing. So it's a decent bet to take the opposite side of that, which is why obviously we think people shouldn't actually be investing on their own. We think that's kind of a crazy way to manage your money.
Well, Vlad, I'm assuming that you have a different take on things. What is the right approach for a guy who's looking at Robinhood and saying, this is so easy, it's free, it's fun? One of my colleagues was like, I'd never invested in the stock market before, but put $500 down through y'all's app. He was like, it's amazing, I love it. I invest in water stocks and I hold Apple.
Yeah.
That was like his thing.
I think
No, sorry, I didn't mention any names. But that's amazing to me. I mean, is that the typical investor that y'all are working with?
there's a couple of different use cases for using a product like Robinhood, and for investing in general. So, there's people that aren't necessarily investing for the purposes of, retirement, putting away a nest egg. I remember when I first, bought my first stock, I was 13 years old, so it was a custodial account that my parents had set up for me.
What was it? Do you remember? What was it?
It was actually a company called 3Com. So if you guys remember 3Com, they made the original Palm Pilot.
Right.
And, I saw one of these devices, I played around with it, and I was so convinced that this was just a revolutionary device that it got me thinking about becoming an owner of the company. And I still remember that first moment when I bought the stock and I received the shareholder prospectuses, and it gave me that feeling of ownership and connection to the company. And that just sort of made me learn so much more about how the markets worked. So I think the beauty of a service like Robinhood is, you can invest in ETFs and build up a diversified portfolio, but you can also make a choice. And if you really, really strongly believe that there's a company that you support or a brand that you like, maybe you purchase their products and you think it's going to do well, then it's not necessarily our job as the people that make the software to tell you you shouldn't be investing. There's some appetite for risk, some degree of healthy amount of risk in every decision people make, whether it's what school you go to, what job you take after school. There's some element of risk buying your first house. You could buy a house in a neighborhood and that could affect the value.
Yes.
So
that all makes sense. One of the things that I'm also interested in, sorry to cut you off, is how y'all both make money, right? So you're free for customers to use. So how does Robinhood actually generate revenue? Where is cash coming from for y'all?
So what a lot of people don't understand about our space, retail brokerage in particular, is that the majority of revenues are actually driven not by commissions, but by other sources. So over 50% of the revenue in discount brokerage, for example, is from interest from margin, interest generated on customer credit balances, so uninvested cash swept into money market, stock loan, a bunch of things that roughly fall into almost the banking-like category. People don't really understand that because that commission fee is so visible.
Right.
So people kind of understand, all right, this service is charging me money. But if you look at banks, banks used to charge monthly fees, and then they kind of went away from that model, and now for a large number of consumers, there's no transaction fee or monthly fee of any kind in banking because they can generate revenue from those assets.
So you can do transactions on the back end of those holdings and sort of generate revenue from what the positions that these people are, right? Am I understanding?
That's correct,
Right,
yeah.
okay.
So we share in many of those revenue streams aside from the trading.
Which is an easier way to make money than, and that just makes sense. It seems logical. But Joe, y'all have, John, sorry, y'all have a hard slog. Y'all are, y'all have to. How much money do you need to hold before you're profitable?
So we don't do any of those things.
Right.
We don't make money off of your money in any way other than the fee that we charge you, which is very transparent and upfront. And we believe that is the future of financial services, that people should actually know what they're paying and should be aligned with the person who's providing the services to them. We think the idea of making money in sort of, ways off your money without you knowing about it makes us unaligned from our customers. We think that would actually break the trust that we are building with our customers.
Right.
And yeah, so you have to get people to pay for something, but I think if you're not paying for something, you should ask questions like, how is this getting paid for, right? If I'm not paying for it.
But again, like profitability for you, like you need, how many billions of dollars do you need to hold before you?
So we're already profitable on every customer. We are making lots of revenues. I think most of our customers have grown their balances something like 50% in the last year.
Right. Wow.
And they continue to to contribute more and more money over time. Our customers, our share of wallet grows every year. The average investable assets of our customers grow every year.
Right.
So we're in a really good spot.
So for y'all, it's just basic blocking and tackling. But Robinhood has some interesting plans for growth going forward. And when you look at the next step for y'all's business, Vlad, where is it going to come from?
I think we've been growing tremendously quickly in the US, in our home market. What we're offering is in many ways a complete product for a large group of investors who are primarily younger.
Right.
So there's a lot of growth in that market. We're at nearly 1 million customers. We announced a few months ago that we crossed 3 billion in transactions on the platform.
Congratulations.
We also see a number of advantages to our service compared to the incumbents in expanding internationally.
Right.
And our mission really is to provide access to the markets to everyone worldwide. So we announced, for instance, last year that we were making our service available in Australia, and recently we announced that we're making it available in China as well.
That, which I think is fascinating. I have so many questions around that. Y'all do have a partner for going into China, right?
We haven't announced anything regarding partnership or anything like that. We launched a wait list.
Right.
About 20,000 people have signed up in around a month since that went live.
Can you talk a little bit about capital controls, or are those details still being worked out? I mean, the movement of money in China is really tightly regulated, especially in a foreign currency. So.
Yeah, I mean, what I can tell you is that we're offering U.S. securities to Chinese customers. That type of offering exists. We're not the first brokerage in the U.S. to actually do this, and we're engaging with regulators. We've been working on this for some time, so I think it's certainly a tough market, but we're very optimistic.
Why China? Just the size of the market?
Yeah, if you look at kind of what retail investing looks like in China, there's 90 million brokerage accounts.
Right.
There's a lot of interest in U.S. brands and U.S. companies. And another thing is that a lot of the largest Chinese companies are also listed in the U.S. and in other markets such as Hong Kong. So yeah, I think it's a big opportunity for us.
When we think about the financial services space, one of my colleagues, Josh Constein, actually wrote a great article last week about banks as platforms and tech companies as sort of APIs that are hooking into that. Do banks really want to be platforms? And do you want to be like an API for them, or do you want to be the next Morgan Stanley or Goldman Sachs? Or I mean, I pose this to both of y'all, actually.
Sure.
Yeah, I talk about it. I think it's crazy that there's not a significant tech company that is, leading the future of financial services, like you have, say, Amazon in the retail space or Netflix in entertainment or something like this. I think we are best positioned to be that company. I want to be that company that owns the customer relationship, that redefines what financial services is for the next generation.
Does that mean that you get into things like lending, you get into all of these other financial products down the road?
It means we become your central financial relationship. We're your advisor about all of these things.
Do you still need does someone need a bank on the back end, or will you issue like ATMs, like debit cards?
Banks can do lots of things, and the reason that people talk about banks as a platform is because they have certain privileges. Those privileges come with a large cost. So I think a lot of us are looking at this space and wondering, well, how do we sort of make the most of the trade-offs here? There's a lot of interest in some of the lending companies that have tried to get around some of the banking regulations by using just equity funding, and they're running into trouble with that now, as we've seen.
That lending club story is nominally interesting. But for Robinhood, how do you see, if you were to say, this is the company that we aspire to be, what does that company look like?
I think right now we're pretty focused on being that investing layer. So we don't have a huge focus on branching off into other sort of banking related or ancillary services. I think there's a huge opportunity for us to provide access to the capital markets on a global scale.
Right.
And I think one of the things that might be a little bit cliched by now is just this sort of need to focus, and we're sort of intimately aware of that, and it's kind of our rallying cry that we just want to focus on nailing what we're currently working on.
And with that internationalization, as you go more global, would you want to provide U.S. investors access to other markets? Like, would you look at offering people options to trade on the LSE or Tel Aviv or Toronto or Shenzhen or Shanghai?
Yeah, that's something that we're certainly going to be looking into, but at this point, the U.S. stock market is quite large. It's a significant portion of global markets, and that's something we already connect to and do a good job of providing access to. So the focus initially, at least, is going to be on just providing access to that to more customers worldwide.
And Jon, when you think about y'all's business, the criticism that gets leveled against this is that this is a feature and not a business, and Schwab can do it, and Goldman could turn it on if they want to. Anyone could turn it on. What's to stop? What is the competitive edge that y'all have that would preclude that from being a concern or an issue? I mean, Schwab already has turned it on, right?
The technology investment that we've made is tremendous, and I think few observers really understand how sophisticated that underlying technology is. We've reinvented the brokerage industry from the ground up. I mean, that is, it's a big undertaking. It takes a lot of capital and a lot of time and a lot of regulatory patience to see that through. I love our position. I think it's going to be very hard for others to catch up to us. I think the incumbents have their tech debt, they have their challenges. Culturally, internally, when you sort of peel back a layer, and all these guys are they're sales-driven organizations. Right? They're all selling you something.
Right.
They're not really aligned with their customers.
Right.
We are. And that's a big difference when you think about how everyone at these companies is paid. It's a big difference when you think about how all of their systems are designed, the incentives involved. It's going to be hard for them to catch up to us.
And Vlad, when you think about customer alignment, what is that message? What message are you telling your guys? The people who are using these millennials that seem to have gravitated to the app, or?
Yeah, I think that's incredibly important. I think one of the things that we believe from the very beginning is that removing the trading commission increases that customer alignment.
Right.
Brokerages that get paid on commissions have an incentive for their customers to trade more and more. It's another part. Another part is just providing advice. A lot of brokerages provide advice to drive up that commission revenue, and our focus has always been on allowing the customer to make their own decision and providing them a very well-designed, awesome tool that makes that as easy as possible.
Okay, very quickly, last question. Jon, if you were Charles Schwab right now, what would you do to compete with an algorithmic robo-advisor?
I mean, I'll hand it to those guys. I think they've done the best job of anyone so far at getting an offering out, and they did it in a short amount of time. When they launched, we started growing faster. Right? They started educating the market about this way of investing, which we think is the future. It's something everyone is ultimately going to be doing. And so I think everyone's going to have to get into this market. If you want to be in the investing business, you're going to have to be giving advice. This is bigger than mutual funds. It's bigger than ETFs. This is the future of all investing.
And Vlad, if you were E-Trade, how would you respond to the threat of Robinhood?
I think it's very tough for a company of that size to respond to smaller, nimbler competitors.
Right.
You have to always have a willingness to reinvent yourself and throw away kind of legacy infrastructure and processes that have been built up for decades,
right,
because they're not relevant for this type of consumer, and that might be very difficult to do. A lot of the consumers for the incumbents rely on things like faxing in
right,
a brokerage application, signing in, mailing it, higher touch support.
Right.
And I think once you have that sort of deep bench of consumers that are using your product, it becomes more compelling to upsell them new services,
right,
rather than going out and getting new customers. So I'm not even sure that.
Basically, they can't, is what you're saying. They're screwed. And with that, I think we're out of time. Thank you both so much for chatting. It's been great.
Yeah, thank you.
Thank y'all. Cheers.
Thank you.